Hey everyone, I'm just gonna go through today a little thing that I've been working on for our brands at the Internet MBA group. We actually, when I turned up at the company, I started by doing this across all of our brands to make sure that we are pricing the products at the right price and keeping track of exactly how much profit we can make for these products. And yeah, so by the end of this, hopefully you'll be able to keep track of your margins. You'll know how to price your product correctly, and you'll understand the actual costs when it comes to cost of goods sold, not what you think your costs are. You'll actually know for a fact that your products are costing a certain amount to be delivered to your customer. And then hopefully by the end of working with this model that I've got here, you'll be able to make more profit because you've got a better understanding of how much money you make, and also you might even be able to, it alleviates more of the margin so that you can actually use that on things like ad spend and not have to worry as much about the product margins that we have. So as you can see in the description there, I've put a link to a little sheet that if you're interested, I'd love you to make a copy of it and apply it to your business. So I've got it uploaded here. Here's just simple, I'm just going to run through it and show you my thoughts and my tips for actually making the most of your revenue and your profit. So here we've just got, I've just put in some random items: t-shirt, jumper, trousers, cap, and all of the blue things in this sheet are inputted. So they're the only things you need to worry about. Everything else should tally up itself. And if you want to break it down, like have a look at the functions in the cells, and you'll be able to see what my sort of process is. So yeah, and then moving on, we've got the cost price. So this is often what people think. Oh yeah, look, I've got this cost price from a manufacturer, and whereas that is great, that, as you'll see later, is not really a close reflection to where the actual cost price of the product when you take into account all of these other things. So this is just the price per unit from a manufacturer. We work a lot to try and get these prices down as we scale up the quantities, but actually when it comes to it, there's a lot of other implications to take into account. So yeah, these are just some cost prices I've got. I mean, often depending on your supply, you might be working in a different currency. I've put it all to pounds for now, just because that's the country we're mostly selling in, and that's the country that we, our bank accounts in even. So then I've put in some, fake quantities, and this is important when it comes to later, and we talk about sort of margins and quantities, because actually the higher margin you have is generally because you've got a higher quantity of it, and therefore you might have a higher margin. So yeah, that's another inputted, that's why it's blue, it's got another inputted quantity. And then we have total cost. So that is just pretty simply cost price per product from the manufacturer times by the quantity. And that gives you sort of a total cost for the product straight from the manufacturer. And this here, the total of this column D, is probably what you'll be invoiced by. Actually, it's probably column D plus shipping. So that's sort of what you might be invoiced from your manufacturer or the factory or supplier. So yeah, but that you'll see is quite a long way away from where the actual final costs come in. So just to let you know as well, I've got these ones that I'm going through here, all the B2B costs, all the costs that you have before you even showing the product to the customer. Then we have duty. So this obviously varies depending on what product you're importing. So it has, there's different sort of codes that you get when you're importing products, and they vary in how much duty they charge you. But this is calculated I've put in 12%, and as you can see in the assumptions here, you can actually, in my sheet, you can go in and edit it depending on what your product is and how much duty you will be charged. There's a few good like calculators online that you can get to work out this so that you don't actually end up running into any trouble. And making sure you do this now means that when it comes to selling your product, all your costs have been thought about and it won't go higher than this. And in fact, more likely is that you'll get a better margin than this sheet will give you. But this is the best way to make sure you maximize your margin by covering the cost before it even arrives. So I've got the duty of 12% there. So then the tax is added to that, and often the tax is added after the duty is taken into account. So it's total cost plus the duty cost, and then it's 20% of that, or however much percentage it might be for your tax. So yeah, then obviously we've got the total import and duty, which I've added as how much duty is paid, how much tax is paid, and then beyond that, I've put in the assumption here of £100 shipping across all products, and you'll see how this is calculated by looking at the units, and like I've just done a quick sort of calculation on that to spread it across the products properly. Then we've got total landed price, and what this is essentially everything to get your product to where the country that you're going to distribute it from. And yeah, so you can see the total landed price there. Then we have storage. So here's this is probably at this point here between column I and J. That's when your product's landed in, say in our case, it's landed in the UK, probably at our fulfillment center. Generally, yeah, every fulfillment center really charges storage. So, I've put in an assumption here of 0.5 per month per product. And then the assumption is that over the course of the year, the storage for all the products will be this much. So actually you won't be paying this much, but it's good to take it into account to make sure that actually when your product gets delivered to your customer, they have covered the charge of everything. And then you've got to maximize your margins from that. Another thing to take into account is picking and packing. This is something that we get charged on a monthly basis by our fulfillment center, and it might be just 20p. It might not seem much, but then as you scale your business, as you scale the amount of products you're shipping in and out every time, it's important to take this into account before you calculate your margins higher than you think they are. Next one is delivery. So I've put here like B2C costs per product. So actually, delivery might be £3.40 per product. Generally, like that seems like a pretty good indication, really. And yeah, so actually, that seems like a pretty good indication for me of like what it might be per delivery, and it might balance out across them all, but obviously you can put your own in here. I've got it in the assumptions bit. You can put your 340 in, or whatever the cost might be. What I did actually with this for Stitch recently was look retrospectively, because we'd already got an invoice and how many picks and packs and products had gone out that month, and I just split it across all of them to make it easy so that we can so we have a good idea of how much every delivery costs. And then what we have here is total delivered. So basically that is this price here: landed price, storage price, pick and pack, and delivery. So it's all of those added together. Do you know what I need to do? I actually did this wrong. I need to do it too. Okay. Divided by that. I'm going to fix this sheet for you later, but basically I hadn't added the delivery in properly, but I will do. So yeah, now we're looking at say this is correct. We've got a total delivered price now of $10.21 for this t-shirt. Actually, that's quite a big jump from £6.22, which is what you think your cost price is initially, to actually when you've covered every single cost to get it to $10.21. Now, that is something that just shows you there that actually when you're calculating this, you really need to cover all your bases and make sure you've taken everything into account. So I've just put in here some assumptive retail prices and like the sort of margin you're getting. So if you think here, we've got total delivered price, and that's the RRP. This is just how much of the percentage the total delivered price is of the retail price. So actually, for the t-shirt there, you're making $24.79 per t-shirt in profit. But obviously, you've got lots of other costs to take into account with profit. So yeah, and then obviously at the end here, I've got a just a sort of sale price or something to help you really realize actually what your margins might be as you look to, you might be doing an offer to help bring in new customers. You might have to sell on your stock at the end of it, and that sale price right there is dictated by the sale price here. So you can change it up to 50%. And you look at if you have 50% sale, like your margins decrease dramatically. Like the cost of the product is actually over 50%. It's like 58% is your cost of product across versus the sale price. So actually you need to look at this and have a real understanding of how much margins you're actually getting to make the most of your product. So here's just a quick overview. I'd love you to have a look at it, send over any messages you've got with any questions, queries about it, and yeah, let me know any operational issues you've got, and I'm happy to help.